Hello there, guys. Welcome and gals. Sorry. Hello there, guys and gals, and welcome to the weekend video. This is bullwaves.org, obviously. Well, this is Enda, and I run bullwaves.org. Okay, enough of that stupidity. Again, weekend video. I hope you had a good week. You should be feeling absolutely elated and fantastic. We have a new all-time high in the stock market. You should be feeling over the moon, and it is most obviously blue skies and plain sailing from here on out for the rest of your existence on planet Earth. That has become plainly clear to me this week. All my worries have just floated away with a break of 26.16. When that happened, my life cleared up, and I just saw this vision out in front of me of brightly lit, sunlit beach with martinis. I don't even like martinis, but some sort of cocktail anyway, and laying back at the beach and enjoying the riches forever and ever. Continual and ever-present riches. And obviously, if you haven't got the sarcasm in my voice, and I have to explain it to you, then you haven't been listening to me long enough. We had a new high in the stock market this week. This obviously blew out my previous conviction, and put my two hands up for that. But it doesn't change a damn thing on what I think is unfolding for us in the very near future. And I hope you all have your affairs in order, is all I'll say. Well, I'll add something to that. Buy a good safe, bury it in the ground, and buy gold, and maybe a new shotgun. Okay, so we're going to go through the 9 markets, and we are going to start at the 4-hour, go down to the hourly, and we'll go over the week and see what we have in store for next week. Obviously, each trading day adds a new nugget of information, and we work on that every night, hence the reason for nightly updates. Okay, so this is Eurodollar, and Wave 2 has expanded again this week, sorry. Kind of expected that to some degree. But so far so good. We're still in a corrective form. We're still looking at 3 waves up. Excuse me. And we're still expecting this to be a corrective rally. You can see here that we broke the previous resistance, just about. Actually, we're back under it then this evening. The previous 4th wave high at one lesser degree was at about 117, what was it, 117.50 or 40 or something like that. So we broke through that on Thursday evening. Yeah. And, excuse me, I'm suffering with a bit of a cold, a man flu this week, and I am a shadow of my former self. So we broke that previous 4th wave, and it's just, it's the initial resistance. Nothing else, nothing more important or spectacular than that. But for Wave 2, I suppose the next serious level of resistance would be the upper extent of the previous 4th wave. So that kind of gives us about 118.50. And after that, it would be the previous 4th wave again at 1 lower degree again, which would be about 119.90. So we have a couple of levels there to work from. There's a possibility that Wave 2 may even have topped at this stage. Let's get down into the hourly chart just to have a look at that. So here's the 3-wave rally in Wave 2. And there's the break of resistance there on Thursday. So we're back down towards that again today. This could be an expanded flat wave 4, and this wave count would be expecting another pop to the upside again next week. So far, it's looking like a zigzag, pretty straightforward, standard 5-3-5 pattern. Well, there's nothing standard in the actual market. I mean, the degree of comparability or comparison between theory and reality in all fields is, you know, let's say it's on a bell curve. And this is about as close to a zigzag as you'll ever get. Even though it is internally quite, let's say, conflicted, but so far so good. The only level I'd be watching from here is 116.42 or 116.43. If we get a break of that again, it will hint that wave 2 is again complete. And definitely if we get a break of support at 115.25, then we could pretty much call wave 2 complete. Okay, so for next week, I'm looking for an initial pop higher on Monday, Tuesday, and then a completion of wave 2. And we'll track that as the week goes forward. Okay, so pound dollar sold off nicely today. We were looking for the completion of wave 2, and we got it, I think. So pound dollar is ahead of the curve on at this stage, and nothing else really to say about that. In this case, we did actually hit the previous fourth wave, and you can see that the previous fourth wave high pretty much spot on. You can see that here. The previous fourth wave at one lower degree was a contraction triangle, and that was last or middle of August, or 15th, 16th of August. And we hit that high on Thursday evening, was it? And Thursday afternoon. And today has just collapsed completely. So we were, in some ways, you know, I have a soft spot for Britain. So I don't like the European project, but I have a soft spot for Britain for some strange reason. So the future for cable is not looking bright right now, if we have wave 2 complete. So here's the short-term pattern. Let's get, my professionalism always shines through while I'm doing these nightly updates or weekend updates. So you can see that the market sold off in a possible third wave of wave 1. So we could be working on wave 4 now. There's some sort of consolidation towards Friday evening in the US. So obviously London is closed. So it's 8 o'clock now. Well, 20 to 8 here in Greenwich Mean Time. So it's quite likely that maybe wave 4 might materialize on Monday. We might see another spike lower in wave 5 of 1. So next week I'm looking for a completion of a bearish signal off the possible wave 2 high, and we'll see how it goes from there. Okay, so dollar yen. Again, I'm still split between the two counts at the moment, given the fact that well, euro dollar seems to have another little leg up in it, and pound dollar seems to have already topped. That kind of leaves us split 50-50 in dollar yen on how this might travel, because we could get a kind of acceleration higher next week, and this may turn out to be a series of kind of compounding 1-2 waves to the upside. The decline portions most definitely are most definitely corrective in nature. So you can see that there's very little in the way of declines off any previous high in this kind of stepped fashion upwards. So we could be talking about, you know, 1-2, 1-2, 1-2 kind of thing. And if that's the case, well, then we should probably shoot up, accelerate higher quite quickly. On the other hand, there's always another hand. There is this looming alternate count here, and we still have that 3-wave form to the upside. So we could be looking at a B wave high and another run down into support at about 109, the high 109s to complete a larger second wave. But for now, it's definitely you know, flip a coin at the moment, because of the turn of events in the other cross rates. But for next week, I'll be looking for kind of a confirmation on either one of these counts, and I can't really bring it any more than that at this moment in time. Okay, so we'll just keep an eye on dollar yen. Here's the stock market, and this is the Dow, obviously. I had been all along counting this as a wave 1 down because of its 5-wave form. I had been counting this as a 1-2-1-2 pattern. Obviously, that was getting more tenuous as the weeks went on. And the reason I was never counting this as a contracting triangle, as so many people seem to have been, and I don't know how many times I got shouted at that this is a triangle and there's a new high. But you were right on the new high, but this was never a triangle because we got an interim low here, which discounted the triangle idea for me, because wave C would have broke lower than the first initial wave A down, and that would never have worked for a triangle. So for now, it's it's possibly a zigzag, wave 4, and I think off that wave 4 low, this is the next best count for me. It's an ending diagonal, wave 5 in blue here. And an ending diagonal is exactly the trick is in the name. It's an ending waveform. We seem to have 3 waves up within every subwave. So 3 waves up in 1, 3 waves down in 2, 3 waves up in 3. You can count this as a 3-wave form as well as a 5-wave form. So I'm kind of split on that one. You could also go. Anyway, I'll leave that where it is. Possible 3 waves up in wave C. We've got this nice central type of corrective expanded flat there, so that could be a B wave. You could also count this as a 5-wave form, as I had been doing, and kind of split the difference on that one. For now, I'm still counting this as an ending diagonal, and I don't see much more towards on the upside. Simply, I try and simplify things, but in general, if you've been following the nightly updates, you know as well as I do. I'm preaching to the choir here. You know as well as I do how horrendously overvalued and horrendously overextended on the bullish side that this market is. It doesn't mean it can't. Obviously, it doesn't mean that it can't rally, but it does mean that the rally won't hold. And my big concern with this, I'm going to go to the weekly chart. My big concern with this rally is that the most viable long-term support level from this point here at 26,000 is down at the previous 4th wave low, which is, you can see here, wave 4 in black. That's the previous 4th wave low of the March 2009 low, which is 6,400 odd points. So you're talking about 20,000 point decline. Just let you stew on that one for a minute. If that has the same effect on you as it does on me, well, you can see how my concern kept me on the bearish side all along on the top here. The 20,000 point decline, set that against a possible few hundred more points to the upside. Even if we do get a 27,000 Dow, that's a 20,500 point decline that you're looking at on the downside. So there is no reason to be bullish here. And if you are my friend, I would ask you to kindly rethink that, because at this point, the stock market in general has never been at a worse position if you are a buyer. Once it does get down to previous 4th wave support, which will be 6,500, and it'll probably overshoot to the downside, I reckon it's going to be a horrendous bear market. It's going to be the next best thing, if not a worse experience than the Great Depression. And I can't even comment on that because I was not alive. But this is not a time to be expanding your economic activity. It's a time to be conserving, and it's a time to be protecting, because the next step in the cyclical move of the market is to the downside, and previous fourth wave support comes in at 6,500. So look out below. Okay, so I'm just going to move on from stocks right now. I think I've made my point. And if you can laugh after that, you know that you have faith. Okay, so here is gold. I'm on the flip side for gold. I'm a bull in gold in general, for many reasons, not just the wave count. But we'll get to that in a second. I think we've completed a wave 2, possibly at the most recent low, and we're working on the beginning of a series of 1-2s up in gold to the upside. And I'm going to go through, on the nightly update tonight, I'm going to go through this, how do you say it? Sorry, the COT, the latest COT data. The latest COT data is absolutely strikingly bullish. And I would just point you in that direction to go and take a look at the net positions between money managers and merchants, producers. So that should give you kind of prod in the rear. Okay, so that's the 4-hour chart. That's wave 2 complete. So we should be moving up into a wave 3, and this is the hourly chart. I've labeled a possible. Obviously, we've got a sharp decline today, so we could be complete over. That could be a 5-wave decline in wave C. Now we have to look again for next week to see if we get a break of those previous highs here at about 12.13. If we do get 12.13.50, I think was the 60 or something like that. Excuse me, the previous wave 1 high. So if we've got a 1-2-1-2 pattern, then we should be looking for a break higher, resistance at 12.17 next week. So keep an eye out for that. I gotta get rid of that. So a possible move up in a third wave next week. Okay, so let's move on to crude oil. We got another spike high today. I'm in two minds about crude at the moment as well. We could even have seen the high in wave 2 blue today. So this count has obviously been updated, and if you were following during the week, you saw that. So this could be counted as an ending diagonal as well. Looking on the 4-hour chart, you can see that contracting range. Spike high today and a sharp decline off that high. So we'll see how that works out early next week. Obviously, if we get a bearish signal off that wave 2 high, then we're looking at wave 3 down in crude. Okay, so here is the hourly chart, and this is what I'm working with at the moment. There, I've shown you that possible high in wave 2 at today's high, and we didn't break 71.81. We came close to that. This is a derivative chart, obviously, so I'd have to look at the actual cash chart to see. But it looks like we spiked up to 71.81 again today, and we've declined off that again. So it's a very real possibility that we could be seeing the end of wave 2 now. I am still kind of half on the fence here, because this could be also a flat correction wave B, and we might see another run up in wave C of 2. So the alternate count is possible, but this is another one of those 50-50 moments within a correction. I hate corrections. Motive waves are so much easier to kind of work with. They just seem to behave, but corrective waves are just schizophrenic. And right now, we're at one of those moments where the larger pattern could extend. So we'll kind of watch that for next week to see, do we get a decline and a bounce into a wave C, or a decline and a corrective bounce to a lower high to to kind of herald in the beginning of wave 3 down. Okay, so we'll go to the S&P. This is again, this is a different count from the Dow because the S&P didn't give an interim low in the April lows. So we have the count in the S&P does fit a triangle wave 4 rather as opposed to the Dow, which it doesn't. So we have that wave 3 high back in January with A, B, C, D, E, a wave 4 higher low in when was the wave 4? So that was the end of June, so 28th, 29th of June. And off that, I'm counting 5 waves up in and 5 waves up in wave 5 of 5 of 5. So again, this is another one of those grab your umbrella moments because the end is nigh. So that's the 4-hour chart. I'm contemplating. You can see that there's the wave 3 and wave 4. I'm contemplating one of these expanding wedges as a final wave 5 in grey here. And so we have the wave 5 in green is tracing out 1, 2, 3, 4 at the recent low, and then a possible expanding wedge in wave 5. Again, that has to be confirmed with an impulse wave down off that high to complete or to signal the final high. But for the moment, it does fit it, even though this expanding wedge does. It's basically an ending diagonal, but it's an expanding diagonal rather than a contracting diagonal. So you can see that each of the internal waves does kind of fit a 3-wave pattern, and even wave 5 here does kind of fit a 3-wave pattern, unless we get an extension further higher. For now, we haven't got that, so there's a good chance that this could be the final wave up, and it would kind of fit really with the narrative of an auspicious high. We get a strange and rare wave pattern at the high of a strange and rare high. So again, because I think that this is a topping market, next week I'll be looking for that bearish signal again. That just hasn't materialized just yet. So let's move on to silver. Silver is not giving the same kind of, let's say, the bullish cues that gold is giving. For the moment, I'm calling that wave 2, the recent low, wave 2 complete. But off that low, it's the rise so far has been rather corrective looking and in 3 waves, and we've had a spike lower this evening. So you can still, because I'm orientated to the upside in gold, and the pattern seems to be more solid, I'm kind of just giving silver the benefit of the doubt at the moment, and we'll just see if we get an acceleration higher next week. If we do, and we push up to the $15 mark again, well, then we're back on. You can see that we could possibly have wave 1, 2, kind of a leading diagonal wave 1, and then expanding flat wave 2. We shall see. This is kind of a wait and see moment in silver. I want to see a larger 5 waves up materialize before jumping on the long side in silver. But I think in general, if you're accumulating physical silver, it's still not a bad buying point at all. Like if you're a steady accumulator, you buy every month physical silver every month, it ain't a bad idea to keep buying, because even if the price does dip a little bit lower, you're still like on the long, let's say on the average, you're still buying at a low. So that still works out. Okay, so let's move on to Treasury market. This is the 10-year note. Let's get to the 4-hour chart. So what I'm tracking is, I should update this 4-hour chart, shouldn't I? And you know what? I'll do it while I'm talking to you, because I am the professional that I am. and I will always have my work done and ready to present to my people before. Okay, I'll stop now. Yes, so this is the 4-hour chart in 10-year Treasury. This is the continuous contract, and again, this is a derivative chart, so the peaks and troughs are slightly off. So I think we have a completed triangle, and gosh darn it, we more or less caught the high on that one, and it's been a down season since then, and it ain't over at all. And I think we could even see. I mean, I have completed wave. I have labeled wave 1 down here in blue, complete, but there's every chance that this could extend even lower and break previous support. We have the lower extent of the previous wave 4 in green here. We have this at about 118.30. So if we get a nice a break of that in a nice impulsive pattern again early next week, well, then we could be on for an even further, let's say, acceleration lower to complete a larger degree wave 1. So let's look at the hourly chart. You can see over the last day or two, let's say from the lows on Wednesday, we've had this contracting form, possible triangle appearing in a fourth wave, and hence the reason that I'm tentatively looking at a market that's accelerating lower. If this is a triangle, then we should see an easy break of support come, late Monday, early Tuesday. And if this is a larger third wave here, if this isn't an extension in a third wave, well, then we'll see further kind of shelves and declines, and shelves and declines. I don't hold out a whole lot of hope for the Treasury market, and I think the ironic thing is I think people will still buy Treasuries because if you're operating in the financial markets, the dollar is your best bet. The reason the dollar is your best bet is because everybody thinks the dollar is your best bet, and you may as well park your money in long-term Treasuries. I think that the Treasury market the Treasury prices are going to continue to decline. And in general, if this depression kind of phase, which I expect, if that does actually materialize, and I have no reason to believe that it won't in the very near future, well, then I think the Treasury market will still have a decent bid under it. Whether the pattern works out in the current kind of bearish setup or not, I still think that there'll be a bid under to a certain extent under Treasuries, even if the yields are rising. Okay, because who the hell wants French bonds? I know I don't. So we have. I could just get back to the point, NW. I need someone here to smack me on the side of my head to bring me back into line. So I think if this is a contracting triangle, we might see another spike lower on Monday or Tuesday. So in general, I'm looking for a complete wave 1 down and then a corrective recovery into initial resistance, maybe 119.50 or so to complete a bearish signal off that high. Okay, so that I think completes. It completes 9 markets. That completes my video review for the week. Excuse me. I'm off to a wedding tomorrow, so that should be interesting. It should be fun. Hope you have a great weekend. Godspeed, everybody. Stay safe, and we'll see you back on Monday evening again. Bye bye. Have a good one.